Now let us solve another problem on income and expenditure account. So here is the question. From the undermentioned receipt and payment account for the year ending March 31st, 2002 of Nagi's Club, prepare income and expenditure account. So they have given the receipt and payment account with some additional information. That is our adjustments. We have to make the necessary adjustment and prepare the income and expenditure account. So before preparing income and expenditure account, so let us recall it, the items that we not record in the income and expenditure account. So we will not record any opening or closing balance, will not record any capital receipts, and will not record any capital purchases. Other than that, we'll record everything in the income and expenditure account. So in the textbook, they have made a mistake. These are the receipts and these are the payments. Okay. So all the receipts will be recorded in the income side, on the credit side, and all the payments will be recorded on the debit side, that is the expenditure side. So now let us record first all the receipts on the credit side of income and expenditure account. So what is the first? Bank balance. We will not record the bank balance. Then there is a subscription. Now subscription is given of the 3 years. Okay. So we have learned that in income and expenditure account we will record only the current year item. So here our current year is 2002. So we will record only the current year item, that is 2002. So subscription is 10,000. Now let us see any adjustment or any additional information is given about subscription in the information. So this subscription accrued rupees 400. Subscription accrued in the sense in advance. Subscription getting in advance. So let us record that. So subscription, all the receipts will be recorded on the income side. So subscription amount is 10,000. You have to add the accrued. Okay, so what is the accrued subscription? It is 400. So 10,000 plus 400 is 10,400. Then we have donation 2,000. Now let us see any additional information about donation. No, nothing is given about donation. So we should record it as it is. So donations 2,000 rupees. Then we have hall rent 300. Let us see any adjustment is given about hall rent. No additional information or adjustment is given about hall rent, so we will record the same amount. Hall rent 300. Then interest on bank deposit. Now let us see any additional information about interest. Yeah, this third one. Bank interest receivable was rupees 150. So it is due or outstanding. So let us record. So outstanding we have to add of the current year. Okay. The additional information, everything will be given of the current year. So bank interest receivable, that is outstanding, we have to add. Bank interest, the amount given in the receipt and payment account is 450. But there is an outstanding interest of rupees 150. So 450 plus 150 is 600. Then we have entrance fees 1000 rupees. So let us see any additional information about entrance fees. Yeah, this fifth one. 50% of entrance fees is to be capitalized. So 50% of the entrance fees should be recorded in the income and expenditure account, and the 50 remaining will be recorded in the balance sheet, because they have said 50% of the entrance fees is to be capitalized. Capitalized in the sense you have to write it in the capital fund, and capital fund occurs in the balance sheet. So the entrance fee amount is 1000. Entrance fees amount is 1000. So 50% we have to record here. So 1000 into 50 by 100 is 500 rupees. Okay. So we have recorded everything that was in the receipt side of receipt and payment account. Now let us go to the payments that should be recorded on the expenditure side. So first is purchase of furniture, 5000. Since purchase is a capital purchase, we will not record that in the income and expenditure account. Then let us move on to the next, that is salaries, 2000. Let us see any additional information is given about salaries. Yes, salaries outstanding rupees 1500. So we have to add the outstanding of the current year. So let us record salary amount in the receipt and payment account is 2000. Add outstanding that is given in the additional information 1500. So 2000 plus 1500 is 3500. Then next is telephone expenses 300. Any information about telephone in the additional information? No. So we should write as it is. Telephone expenses 300. Then electricity charges 600. Any information about electricity in the additional information? No. So electricity charges is 600. Then postage and stationery 150. Any information about postage and stationery? No. So write as it is. Postage and stationery 150. Then purchase of books. Since purchase of book is a capital purchase, so we will not record in the income and expenditure account. Then next is entertainment expenses 900 rupees. Any additional information about entertainment expenses? Yes, the second one. Entertainment expenses outstanding rupees 500. As I said, we should add the current year outstanding. So entertainment expenses, the amount given in the receipt and payment account is 900. Outstanding amount given in the additional information is 500. 900 plus 500 is 1400. Then we have purchase of 5% government papers. So these purchase of 5% government papers will not be recorded because it is a capital purchase. But the interest, whatever the interest they'll get on this 5% government interest will be recorded under the income side. So let us record that. First we have to calculate it. So what is the date they purchased the government papers? They purchased it on 1st of July 2001 and our accounting year ends at 31st of March 2002. So the government papers they purchased for 8,000 rupees and they would had got the interest of 5%. So now they purchased on 1st of July. So and the accounting year ends at 31st March. So how many months will they get the interest? Since it is 1st of July, you have to consider the month of July also. If they had purchased on 31st of July, you would have considered the next month, that is August. So here it is on 1st of July, so let us consider the July month also. So July, August, September, October, November, December, January, February, March. So 9-month interest they have to get. So 8,000 plus 5%, that is 5 by 100 into 9 by 12 will give you 300 rupees. So 300 rupees is the interest. So interest received will be written on the income side. So let us record here interest on government papers. And how did we get this interest? We took the amount they purchased, that is 8,000, then 5% into the number of months the interest was due, that is 9 months. So 9 by 12 because 12 months are there in 1 year. So 8,000 into 5 by 100 into 9 by 12 will give you 300 rupees. Miscellaneous expenses 600 rupees. So anything about miscellaneous expenses in the information? Nothing. So let us record the miscellaneous expenses. So miscellaneous expenses is rupees 600. Then we have recorded everything that is given in the receipt and payment account. We will not record this cash balance because we will not record the opening and the closing balance. Now let us see the additional information that we have recorded. All the things that are given in the additional information. So we have recorded salaries outstanding, we have recorded entertainment expenses, we have recorded bank interest, recorded subscription accrued, we have recorded that 50% of entrance fees is capitalized. There is a last thing, furniture is to be depreciated at 10% per annum. So we have to make a depreciation on the furniture. Okay, so depreciation is an expense, so it will be recorded under the expenditure side. So let us record it. So depreciation, we have to charge on furniture. So what is the furniture amount? It's 5,000 rupees purchase of furniture. So here also the purchase is done on 1st of July 2001. The furniture amount is 5,000. For what percent we have to charge? 10%. It's 10 by 100. Now, for how many months the depreciation should be charged? They purchased on 1st of July and the accounting year ends at 31st of March. So, from 1st of July to 31st March, whatever the number of months, that is July, August, September, October, November, December, January, February, March. That is 9 months depreciation should be calculated. So, 5,000 into 10%, that is 10 by 100 into 9 by 12 will give you 375 rupees. So we have recorded everything given in the question. So now let us tally the income side and the expenditure side. So first let us tally the income side. So 10,400 plus 2,000 plus 300 plus 600 plus 500 plus 300 will give you 14,100 rupees. Now let us total the expenditure side. 3,500 plus 300 plus 600 plus 150 plus 1,400 plus 600 plus 375. Since the income side is 14,100. But if you tally the expenditure side, you are getting as 6,925. So what is the difference? It is when you minus this 14,100 and 6.25, we will get as 7,175. This is nothing but surplus or profit. Why? Because excess of income over expenditure. Since the income side is greater than the expenditure side, since the incomes are more than the expenditures or the expenses, you have got a profit, that is surplus of rupees 7,175 rupees.
Thank you guys for watching the video. Do like the video if it was helpful for you and subscribe to the channel for upcoming updates.